What's going on? What's good? It is Obailiso Mutupi, and I'm glad that you are here on my YouTube channel. You could be anywhere, but you chose to be here. So basically what that means for me is that I need to be able to share with you the most effective value, on which today's video you are going to be looking at some of the top 3 effective and as well profitable strategies that I've tested, that I've traded with, and now I'm sharing them with you in just this short video. So this video I'll try to keep it less than 12 minutes, but I highly believe that it will be effective. So let us get straight into it. The first strategy that I've got here is the Fibonacci strategy. So let's say for instance you are looking at the upward trend. So basically what you do is that you take the Fibonacci tool all the way from the bottom, which is the swing low, up until the swing high, and then you wait for price to actually get to the 38% retracement. And as well, once price gets there, you wait for a candlestick confirmation, and then you are able to just go all the way up with targets. So right now, right here in front of us, you can simply see we've got gold here moving up, moving low, moving up, moving low, and as well moving up right here, and then it came low. So right here we can see that the retracement was a bit more deep. So let's say now, for instance, we are looking for what type of entry we are going to be taking. So we're waiting for price to actually just be able to just move forward, and we can simply see that price has now started moving upwards. Let's say for instance price was here, tested these lows here, and then now it came a bit more up. So while price is moving like this, I'm just going to play around with the candlestick so you are able to see. We can see that this area right here is where price failed to have broken, which is our high, and as well this area right here, you can simply see this could be more of our swing low. Then basically what we'll do is that we are going to be waiting to see the 38 retracement. Let's say for instance we'll put it, this does not break, but we're going to take it all the way from swing low, which is right here, from swing low right here, which is going to be up until swing high right here. And then let me just make sure it's on the right spot. You can simply see this is what we've done, and then boom, hopefully this does not break above. There we go. Okay, we can see that now price has given us this impulsive, this is a retrace. Okay, perfect. We can see right here, this is where our 38% is. Price went all the way to retrace up until the 38% area. So then what we do is that we wait for a candlestick to confirm, which is maybe a bullish candlestick. Boom, then we can simply see right here, this candle came, it was not engulfing. Then the followed candle, let's see, is it engulfed? There we see, we can see that this candle has engulfed a bit. While this candle has engulfed, once it closes, what we do is that we are able to place maybe some buy positions just there at the close of the candle, stop loss maybe somewhere around here, and then we can look into maybe taking profit right here at the highs, which could be somewhere around here. So let's just see what happens with this exact same trade. Then we see price just moving upwards, price moving upwards. And also with this strategy, some of the hacks that you can come across is, you can see price broke above here and then price started going upward. So with this strategy, some of the hacks that you can do is also just by going to a smaller time frame. How I normally do it is just by going to a smaller time frame, find out that I could also be able to spot an entry somewhere around here, meaning that if I was able to go to the 15-minute time frame, you can easily see already this candle, this engulfing candle that went and broke above. This is where I could have entered as soon as it closed above this whole area. Then obviously stop loss below and then take profit just above. And then we see price just pushing all the way upwards up until, let's just see, boom, right here we've hit take profit. So basically this strategy, you can see the first take profit has been hit 2.66%, and yeah, this is just how you go about it. So let's just look for another opportunity since we are still in an upward trend. Price is pushing upwards. You can see now price has reached some level of resistance. Let me just remove this. Price is still in an upward trend. Just by doing this, you can easily see that we are still in an upward trend. Let me just remove this low here, and as well this. Okay, you can see it's like we experienced perfect. Let me just stop it right here. Stop it right here. Perfect. You can see now this is gonna be our most recent swing low, and then we are pushing price all the way upwards here, which is at our swing high. So you can see here's the low and here's now the high. So we moved from here to this to now being this, because we're working with one impulsive move. And now we can see that price went all the way, it broke below the 38.2, and now it's playing here at 58 at the level 50%. Let's just see. Boom, can see right here is right here is where the engulfing candlestick happened. So basically right here is where we can start by looking into placing an entry. Mind you guys, when this reaches at the 38% level, it doesn't mean that once it gets there you just place a buy limit and then it goes up. No, it means that this is a full retracement that has happened. It has retraced at least 38% of the level, which means that whenever it goes down, there's a high chance that wherever it will retrace, it can retrace at 50%, it can retrace at 61.8. But the most important thing is once it breaks this first retracement level, that's where you start to look for those buy opportunities. So let's just see. And then now you can see you implemented, you have placed the trade somewhere here, then price is moving upwards, and you can see boom, price broke way above here. You can see now this trade was a bit more better than even the first one, because here we closed 3.7% on just this trade. Okay, and that is just because we are on the right direction, which means that we are buying when the market is buying. We're not trying to be against the market. So let's see if we can find one last opportunity looking at the Fibonacci retracement strategy, and then from there we are going to be moving on to the next strategy. So let us just see one more time, just being able to take it from somewhere here. And because of sometimes, guys, it's very important when the market is very impulsive, it means that price can just retrace literally at the 38 and then continue to just move upwards. But when the market is maybe a bit more sloppy and stuff, it can still even retrace all the way down to the 88.6. It does happen. In fact, there's even strategies for that, but yeah, we'll be able to just look at them. For now, let's just see. We can see prices moving upwards. It's playing around here, and then boom, it touches here at the 38 level, and once it touches here at the 38, it even gives us a hammer. This would be a riskier entry. I wouldn't really take such trades, but for target purposes, I'd be able to just use this Fibonacci tool. Then I'll be coming all the way up to 127. Let's just take a look at this engulfing once it closes. This is more like a risk type of an entry, and then boom, let's just see. You can see price now pushing upwards, price pushing upwards, then go all the way up to close to take profit. Hopefully it just goes and breaks beyond take profit, but somewhere around here, perfect. You can see now price is broken below above take profit, which is the Fibonacci strategy. So now one thing that I want us to do is look at the next strategy. That was the first strategy. I hope you guys found value from it. So now we are going to be moving on to the second strategy, and I need you guys to pay extra attention to this, because these are some of the strategies that actually helped me be able to just go from literally when I was still like 3 years in the markets to be able to just get the breakthrough that I needed within the markets. Because why? They're very simple, very easy to follow, and truth speaking, even for backtesting purposes, it allowed me to be able to see results. So now if you happen to find value from this video, the one thing that I need you to do is to like this video, and at the same time subscribe to my YouTube channel. Let us dive more deeper. So right now we've got the pattern strategy. You guys, if you've been following me, you know that I love patterns, and with the pattern strategy, it's very simple. So what you do is that in an upward trend, you basically just start to look for a continuation pattern. And once you are able to look for continuation patterns, the reason I say continuation is because of the fact that I understand that there could as well be reversals, but with reversals they are a bit more advanced, because of the fact that you might not really know necessarily that price is going to reverse at that exact same area. So it's easier to follow through with continuation patterns when price is going in that exact same direction, because now you don't have to time where the market is going to reverse, but you only continue with it, because the easiest thing that you can do is to spot a trend compared to trying to figure out where exactly is it going to reverse. And then with this, you can easily see that we look for patterns that are being printed while the market is moving in that exact same direction, and then from there we are able to spot either a flag pattern or a wedge. There's different types of pattern, but for now I just want us to focus on two, which is a flag and a wedge type of a pattern. So basically, just by now coming on the charts, we can easily see same thing. Price has been pushing upwards, higher highs, higher low, higher high, higher low, higher high, higher low, and so on. We're seeing prices moving upwards. So basically we can see that we are more in an upward trend. It's very simple to spot. We are in an upward trend. So what we do is that we wait for price to just give us the initial impulsive move. So once price is giving us an impulsive move, just like this, we see prices now pushing upwards. It's pushing upwards. Perfect. We can see prices pushing upwards. So basically now that we are in an upward trend, we will be waiting for price to just play out a bit, just so we are able to get much more better confirmations. And then we can see that right here price is almost like printing more like a falling wedge. If I'm able to just put this, because this held, and as well I'm able to just come down below here, and then I put this all together, we can easily see that price is now giving us some sort of a falling wedge type of a structure. Okay, then right here you can see price, in fact here it confirmed on this third touch with the hammer, which means that this is the candlestick confirmation that we normally wait for. With this type of strategy, actually there's 3 types of entries. The first entry would be maybe entering when you're seeing this type of an entry on, let's say, first touch, second touch, third touch hammer. You can enter taking this type of an entry, which the risk of it is that there's a high chance that you might also take a bit more stop losses in on the journey. But if you're okay with it, you're cool with it, because the risk to reward is going to be amazing. So looking at the reward, you are able to take that leg from all the way down to here, all the way up to here. That's how we'll be scanning rewards. This is the first type of an entry, and then but you see the risk to reward. The second type of an entry would be if price breaks above here, which now this might reduce your many stop losses that you might take, because you are taking it when it is confirmed, and it's much more easier and safer. And then the next type of an entry is if price happens to go break above and then come back to retest. This could still also be another entry, which is a very reduced risk entry. But the only disadvantage with that is that sometimes price doesn't come back to retest. So which means that if you're only waiting for it to do that, you might miss out on a lot of opportunities, because you're waiting for that perfect trade, which might not even come back. Okay, so looking at it, let's just see. For us, we are more comfortable with the risk types of entries, just because of the risk to reward. I like looking at the risk to reward. You can see price is now shooting upwards. Price is now moving cleanly upwards. And we see price now pushing upwards. Boom, all the way right here till take profit. You can see price moved upwards, and how we got take profit is we took the impulsive leg from all the way from the bottom up until here at the high. Then we used that leg to be able to follow here. Remember, with the markets, it's only 3 phases, which is the impulsive, the second followed by a correction, and then followed by the next impulsive phase. So that's how we are able to determine how the market is more likely to move. So now we can see price got here at the resistant area. So basically what we'll do is that we are now going to start looking for what price is saying, what price is doing, just so we are able to see if we can identify any opportunities from this using these strategies, these pattern strategies. So now we can see that price obviously has came somewhere here. Boom. Okay, I can already see price is giving us this type of a pattern, and as well right here I can see we've got something more like this. So there's a continuation pattern, and then in terms of, wait a minute, and then in terms of, can see it's just more like this. And then in terms of take profit, like we did say, the impulsive leg, taking it from here all the way up to here. So then with this, I can see in terms of, for me, what I'm more likely to do is take an entry looking at this engulfing. But I did say for most people it might not be the better option, because these types of entries are more likely to hit more stop losses along the journey. But for me, I'm comfortable with it, because I'm comfortable with taking the risk, looking at the rewards. These types of entries are more likely to give us, insane risk to rewards. But if you happen, let's say for instance, more like this, I'm taking the trade more like this, and my take profit is here. This is what the risk to reward would be. But if you are a person that would wait for the breakout, let's say for a breakout, which is somewhere here, your stop loss would still be here where I put mine, and your take profit would be here. Look at your risk to reward, which is 1:6. So such is like, if you really want to play it, say if you want your trades to go more into profits compared to you willing to sacrifice your rewards in order to just hit take profit. So this is something that you can also look into. But let's just see how this trade plays out, looking at this pattern strategy. So we can see now price is moving up. So most people would be entering now when price breaks above here, and others would maybe enter now when price comes and does this retest, because like I did say, look at it, price broke above, Now it's giving us this retest right here. Broke above is giving us this retest because this could also still be an entry. Then you're going up with it. But at the same time, me, I'll be looking into, obviously at this level, I'm trying to lock in profits. I'm trying to just manage this trade and do so on. So you can see now price is moving upwards, hopefully up until here at take profit areas. Oh, price actually didn't even get there yet, but you can simply see this is how price is moving all the way upwards to this take profit area right here, and we can even see price now pushing all the way up. Moves nice, moves impulsively, and this is one of the best ways that you can use these strategies in order of you to be able to trade with confidence. This is the third strategy that we are going to be looking at on the top 3 strategies that you can use. You can literally just take these strategies and then apply them to your own trading journal, whatever the case is, and maybe hopefully you would be able to see results, because these strategies have been tested. These strategies are being used each and every single day, but most importantly, if are being used correctly, can give you great results. So on the order block strategy is like, let's say for instance you are looking at a downward trend, and then while you are looking for a downward trend, price then at some level of support, it comes and then it starts to create a change of character, meaning that once price was moving downwards, it breaks some sort of a lower high, then it changes the character. So once it broke that previous lower high, which is now or more like a change of character, then price is gonna go back, come back down more like a retest, and then create a break of structure, which it breaks the new high that it created. So what we do is that once it breaks that structure, the new high that it created, automatically we are going to be looking at the last candlestick that has printed a bearish candlestick before price went up and broke the change of character, not the break of structure, but the change of character. And then that's where we start to put our entry limits on. With this strategy, I love it so much because it gives us better risk to rewards. But let us now look at it in terms of on the actual charts. So we can see price came from obviously low high here, lower low, lower high. Let me just do this. Lower low here, lower high, then price broken here to the low, which means that the change of character would be if it breaks the lowest high. Let's say could be here, and some people would say yeah, anything is okay. So that would be the first change of character that we'd be looking for. So you can see also we had some level of support right here. You can see some level of support. So then what we wait for is price to break at least above this area right here, and then once it breaks above that area, we are now going to be waiting for some level of right here. We can see let me get it. There we go. Here's a break above. So then once price is broken above, we also wait for a break of structure. Now we can see price is retesting. This is our structure right here. Price is now broken above. So basically, let me just do this. Price is moving a bit too quick for me, but let me just do this so you are able to see price has broken above this, which this is a change of character, and then it went up. There's a new high, and then it went a bit below, which is a higher high. Then this is more like a higher low, then it broke above it. So basically what we do is we take the last bearish candlestick before price broke the change of character, and then we are able to just put this more like this, and then we'd be able to just put our buy entries right here, and then we'd be able to put our stop loss right here, and then our take profit would be right here back at the most highest high. So with this, obviously when it comes to different types of entries, this is what I've tested, this is what I've seen work for me. There's different types of entries for most, or different types of people. Mind you, we are all different traders. That is why how I see things might not be the same as how someone sees it, but the most important thing is back testing. So let us now just see, and this is how you back test. I'll be able to just do this over 100 trades, and once I'm able to be confident with how the market will be moving, that's when I'll employ this in the actual markets. But let us see how price is moving right now. So basically now you can see my entry would be here, buy entry. Then let's see if we are going to be tagged in. Boom, we got tagged in. You can see here we got tagged in right here, and then our stop loss is here, and our take profit is here at the high. Risk to reward 3:4. Mind you, me, anything that is above 1:3, I'll take that trade. Most people, they don't mind taking trades that are 1:1 just so they can say they've hit take profit. For me, it's not the safest way. I go for anything that is above 3. Okay, so we see now we in, and then price is now trying to move upwards. Let's just see if it's gonna go all the way upwards to take profit. Then we see prices moving clean upward, nice impulsive move. Right there we can see prices still continuing upwards. It's a nice squeeze ranging markets right here. Hopefully it just squeezes out of this ranging markets. You can see the markets is now ranging. Then boom, it's like engulfing is starting right here. Let's see if it will continue to move. Well, okay, it's still ranging. Boom, this nice engulfing now, which is clean. Obviously, if I'm also able to just support it with some more strategies that I did show you guys, you can see even this is one nice beautiful pattern. Then boom, all the way up to take profit. You can see right here prices hitting take profit. Let's just see if it can go way beyond, but you can simply see prices hitting take profit. But also one thing that I love about stacking these strategies up is already with the mindset that you would have got, you can see now prices hit take profit here. With the mindset that you would have got, this would have been another entry. You would have caught another entry here from the first strategies, which means that now you are adding on. This would be a 3%, this would be a 4%. Altogether, you're looking at close to 7.4%, which would be amazing. But there you have it. I'm just glad that you guys did get to see the top 3 strategies that are highly profitable. Learn this, watch this video multiple times, be able to just see how actually which strategy makes best sense for you, and then once you are happy, you can be able to just back test the strategy, do what I just showed you now with at least over 100 trades, and then once you are confident and comfortable, you can be able to just employ it in the real markets. If you happen to have found value from my YouTube video, make sure that you do like and as well comment below which strategy you believe works best for you. And on top of that, I need you to subscribe to my YouTube channel if you happen to believe that this channel is giving you massive value. I will see you on the next YouTube video. It is your boy Mutupi, and I thank you so much for watching.